Welcome to Beyond the Press Release, a production of Agoracom, in which we take the time to speak with small cap executives after they put out important news. With us today, because he keeps putting out important news, you can see him, Shafin Diamond. He's CEO at Victory Square Technologies, trades on the CSC under VST, and for our friends in the US, VSQTF, and for our friends even in Europe, 6F6 on Frankfurt. For those of you new to the story, because you may have seen that great headline that we're talking about today, here's our thesis. This decade is going to create 3 times more wealth from disruptive technology than the last 3 decades combined. That's going to happen because of the convergence of AI, virtual reality, augmented reality, blockchain, crypto, renewable energy, all of that. The challenge is that most investors have very little expertise in any of this, let alone all of them, and they don't even know where to start looking or even how to evaluate companies. That creates the danger of investors, especially small investors, missing the boat of the greatest wealth creating decade in history. The good news, Victory Square gives its investors access to a basket of the best startups in those industries I was just talking about and more. Why? Because they build, acquire, invest in promising startups. They provide them with the leadership, the financial resources, the tech resources to fast track their growth. And now they've got a portfolio of more than 20 companies, more than just lip service. For their fiscal 2020, net income record $19.7 million and 30 cents per share in earnings. And the press release we're talking about today, Victory Square reports 6th consecutive quarter with positive net income and earnings per share. Shafin, welcome back to the show. Congratulations.
Thanks for having us again. It's always a pleasure getting a chance to speak with you and people that are watching this.
Well, they're watching for you, that's for sure. I'm just a vehicle. So let's do a deep dive into this. But before we do the deep dive, this is your 6th consecutive quarter with positive net income, and that says a lot for the kind of company that you guys are. How does it feel to see that plan working? You and I talked about it once: seed, plant, grow, harvest, and keep that rotating. How does it feel now? And do you think you're fully in that process?
Yes. So this 6 consecutive quarters, I think trails back to Q1 of last year. And so we've said before, last year was an inflection point for us where the seeds that were planted in 2017 and 2018 we're harvesting. And I think that's why on a quarterly basis, you've started to see, as a portfolio company harvests, VST is able to unlock value. And as a seed harvests, unlocks value and liquidity is created, allows us to build that top of funnel again. And so for us, last year was an inflection point in that the first couple of seeds that we're planting, we're harvesting. This year's been an interesting year because in addition to new seeds being planted and seeds being harvested, we've also had liquidity as a company being able to unlock value to reinvest in building off what you'll see kind of harvest in the future. So for us, it's been a great 18 months, but I think investors can anticipate this to be a pattern on a quarterly basis as we go forward. And just to put that in context, if you look at Q2, which we just released, you saw us issue a dividend in GameOn. GameOn went public, so an asset was spun off. We did a financing and a prepared listing for Immersive, which should be listed very shortly. CQT did a $10 million US event, and Stardust Solar was a new investment into the portfolio. And that same idea of spin out, a dividend, a new portfolio company, and financings is the same thing that's been happening in Q3 as we've updated in our corporate update. So I think investors can be prepared to continue to see this kind of flywheel, churn on a quarterly basis as we go forward. So.
And that was going to be my next question, because look, this isn't, you're not a production line business where you just, putting widgets into the beginning and come out value add widgets and just got a production line. It's not the easiest thing in the world. You guys make it look easy to find ABC widgets, to capitalize it, to grow it, while at the same time you're exiting on the other end. So I was going to say, can you guys keep this going? But there's the answer to that question. So not only can you keep it going, where do you think it goes, Shafin? Because you guys are on the cutting edge of what's happening out there in the disruptive technologies that I mentioned. How are the opportunities looking for you? How's that funnel, that pipeline looking for you guys?
I think the best way to answer that question is kind of in three parts. One is you kind of said this at the outset. We're focused on disruptive technologies that are going to dictate not just the next month or the next year, but the next 10, 20, 30 plus years. So the seeds that we're planting are not short-term seeds. We're really going after large opportunities. And our goal, every 3 to 5 years is at a minimum to double our NAV and just keep this compounding growth going. We're at Victory Square, we're big fans of, Berkshire's model and Buffett and Munger, or even, an investor like Joel Greenblatt, where these guys have been successful for decades. They've gone through recessions, pandemics, different type of economic environments, but over time, they've continued to compound, the growth. And for VST, this is not a short-term goal for us.
No.
A couple of other points you mentioned. One, access and opportunity. So tech is borderless. So this innovation and these breakthroughs are not just coming from Silicon Valley; they're coming from all over the world. And so, having set up relationships with 80 accelerators, we're able to find these hidden gems and these needles in a haystack globally because of this network that we brought up. So for investors, they're getting access, they're getting opportunity, and then one of the most important things is diversity. I think not having just one company or being so heavily loaded in one sector, you're getting risk mitigation in that our portfolio on a quarter-to-quarter basis, whether there's a recession, a pandemic, a pullback in one sector, we have the ability to kind of withstand that, in that there's diversity in our portfolio. So, to answer your questions, one, our internal goal is to continue to double, our NAV every 3 to 5 years. We're long-term on this. So the sectors and spaces we're in, we're expecting massive growth, asymmetrical returns over the next 10, 20, 30, years. And like you said, climate not going away, health not going away. The underlying architecture for technology, which, for us, blockchain and crypto, Web3 is a big focus for us, not going away. These are three things that are going to be staples forever. So, I think we're in the right spaces.
Devil's advocate, you and I are both disruptive tech guys.
Yeah.
And you've just spoken about some of those. The great news is unbelievable opportunity everywhere. The devil's advocate side, the hard news is artificial intelligence just on its own is massive with hundreds of applications. How do you guys keep track of, on top of that, opportunities in virtual, augmented reality, Web3, which is crypto, NFT, blockchain, renewable energy? I mean, does it almost become, do you think you might have to get to a point where you start specializing in, 3 or 4 of those just because the opportunities are endless? Or can you guys actually keep up with all of these at the same time?
That's a great question. And so our model, so these are the areas and in sectors we want to be in. And, for us, we're an early investor. We're not passive. So we're generally the first check into some of these organizations and companies. Our model is, building a company is the ultimate team sport. So we may not be the AI expert on the team or the VR AR expert on the team, but in any team, you're going to need user acquisition. You're going to need a back end office. You're going to need funding and financing. So what we found is we found some of the smartest people in these categories. And in each of these categories, we complement those founders and play a certain role. Now that role we play is tied to our core competency. So it's very easy for us to scale and replicate that role into all of these different kind of portfolio companies. So we don't have to be the smartest person in the room, and we don't have to be the smartest subject matter expert in the room. Because in any business, even if you look at, let's say, the medical profession and being a physician or a doctor, there's still a business that needs to be run behind that to be successful. So what we found is we play a very complementary skill set in a lot of these portfolio companies, but we don't need to be the subject matter experts on that specific discipline. And in a lot of those cases, right now, if you look, our portfolio probably sits at about 26 companies. And we're very well versed in we've pretty much got an anchor in all the areas and sectors we want to be in. So now to go deeper, that team that we support goes deeper, and they're very specific in that subject matter. You know, look at fans as an example. Within the esports and sports betting space, we don't have to be the subject matter experts. They do, and they give VST and VST shareholders access to participate and benefit on that because they've got the board, the management team, the product, the resources to really, really be a thought leader. So what we've tried to do here is plant an anchor into all these sectors, back the right jockeys in those sectors, play a role to surround them with the resources and you know, where we can play a key role. But they're going to be the jockeys. They're going to be the ones that really allow us to participate in the growth and expansion. So this is how we've been able to scale our model, you know, globally, which is a very unique to Victory Square.
One thing I love about what you guys are doing is that you're sharing the wealth right away. Sometimes frustrating things with small cap companies are, even in mining, let's say, you know, they hit a lot of gold, they hit more gold, they're producing, and then they take that money and they just put all of it back on the ground to try and find more gold. Great, but the problem with that model is sooner or later, you're going to stop finding gold, right? And you've burned up a lot of cash, and shareholders get frustrated. But you guys are issuing special dividends. We talked about that. You mentioned that earlier, just this year already on GameOn and Immersive. How important is that to the model going forward? And what kind of feedback are you getting from investors? Because I love that. You're giving everyone a piece of the pie today rather than saying, hey, George, we got a great portfolio, we're doing great, and just wait 3-5 years as all these grow. And I love what you do. How important is that to you guys going forward?
It's very important. And to put this in context, like Victory Square, the foundation was, and the thesis was based off of what we wanted to see, what we wanted to invest in. So we wanted to invest in the public company that was audited, liquid, transparent, and aligned with management, where we could invest as little as $500 or as much as we want, and this would be open to investors around the globe, globally, and access to some of these best next tech emerging companies. So the dividend. So for management, we're the largest shareholder, and so this idea of a dividend, you know, presents two things. One, because we're long term. As an investor, I don't want to sell my VST share. You know, this is going to compound every 3 to 5 years. This is a long-term play. But if I can be rewarded along the way, just like a Berkshire would reward its shareholders for staying shareholders loyal, you know, for 30 plus years, it's this dividend. It's sharing in some of that. So every time we spin off an asset, you know, we have a strategy of 3 things. One is to issue a portion of that to our shareholders. So VST shareholders get rewarded every time that happens, and that could happen on a quarterly basis, happen in Q2, happen in Q3 again with Immersive, and we see that happening again.
Love it. Then
taking a portion to liquidate at a higher valuation to be able to rebuild the funnel. So we built a self-sustaining machine. So we don't need, this is where, you know, we buy low, liquidate high, reinvest, you know, into the business. And then the third is we believe in these businesses long term, so we do want to hold assets in these companies in the long term. So for us, this pattern of dividend, taking some money off the table to reinvest, and holding is going to be paramount as the story continues to unfold over the next months, quarters, you know, years for VST. And we're shareholders ourselves, so this dividend is a really, really beneficial thing for us because nobody wants to sell their stock in VST on the management team. We want to accumulate.
By the way, I think you're being overly conservative when you say goal is to double your NAV every 3 to 5 years. I mean, this is just my opinion, but the way I see the portfolio growing, how you guys are spinning these out, I would say it's going to be closer to every 3 years, not 3 to 5. But let's talk about net asset value, because, and I want to make sure, we've talked about this before, but there are new investors coming all the time. You have 26 portfolio companies, but you don't necessarily they don't all show up on your balance sheet, right? So explain to people how, you know, you may have an investment in ABC Widgets, but doesn't all show up on your balance sheet, despite the fact that it's grown from here to here. Just explain that for people so they have an understanding, and because that obviously goes to net asset value.
Absolutely. So a couple of things to your point. So, you know, right now, if you looked at the last 36 months, we've we haven't just doubled, we've like 5x
Yeah.
our portfolio. But being conservative, and I just want to touch upon that. Our current NAV is between 110 and out 125 million dollars. Now, even if we were to double that every, let's say, 3 years, which again is still conservative based on what the past 3 years have been.
I think so.
You're looking at 250, 500 within 10 years, a billion within 20. So there's this compounding effect, but we're just like you said, we're accelerating that number significantly. But to be very conservative, even that is significant. But one of the things, so we fall under this IFRS accounting guideline. So when our ownership stake or our control stake is above, sometimes in some cases 17-18%, it is consolidated. So we don't, the true fair market value of that asset doesn't show up. And what might show up is our cost base that we've actually invested in that company. And sometimes that cost base is actually depreciated. So, someone can look at Stardust Solar on our balance sheet and see that, we invested 600 grand, but it's been, semi-depreciated, even though that business is financing at a higher valuation and values increased significantly from our cost base. But there are a couple of really big companies that don't show up on our book value. And those are Immersive. So if someone's reading our Q2s, Immersive is consolidated. So Immersive doesn't show up. Immersive just financed at a $24 million pre-money valuation. Immersive was built internally, like inside VST, where it was a wholly owned sub. So when that gets deconsolidated, there's value there that's not even showing up on the book value. Hydrate's another one. Hydreight, which was an asset we acquired for, I think, $3.6 million roughly in an all-stock transaction in January, has grown considerably, and their fair market value has grown considerably, but again, doesn't show up. That fair market value doesn't show up, and that's the same case with, draft label, Copilot. I mean, Copilot is a beast right now. Anyone that's followed our story, we don't talk much about this company, but Copilot Advisors, I think we have about a 23.1% stake. We invested this company, George, in 2018. Brilliant management team, but they're on track to end this year with 25 million in ARR. Their valuation is, and they're SaaS companies. This valuation is, SaaS companies trade at a 12 to 18 time multiple. So again, but on our balance sheet, I think the pickup is maybe 1.2 million on our assets, but that company is a beast. So, to your earlier point, there are a number of really big anchors we have on here that don't show up in the book value.
And could pop your NAV overnight, right? Because suddenly, by the way, what's the trigger? What does it take for, GeorgeCom Technologies to go from really not showing up on your balance sheet to being able to put on your balance sheet? Is it when it goes public, or is there another trigger? That way investors know what to look for.
So the threshold is generally when we fall below, I think it's like 18% ownership. And generally, they don't like us to have a controlling stake on, in the management or board. So, usually the thresholds are, we fall below, 17, 18%, and that we're not actively controlling, we don't have active control of the management or the board. And those are usually kind of the triggers.
All right. Any last parting thoughts for everybody? Because we're going into Labor Day weekend. You've done anything but be quiet over the summer. So I'm expecting a lot more to you guys for the rest of Q3 for September, then into Q4. Parting words for everybody, given your success. Yeah,
I mean, a couple of things. One, first off, thank you, for covering the story, and thank you for all our share owners for supporting us. But I think the best way to end this going into Labor Day in Q3, Q4 is that access and opportunity. So VST's got a diverse portfolio of 20 plus companies around the world. So digital health, green tech, the creator economy, crypto, virtual and augmented reality, gaming, esports. So there's access, there's opportunity, there's diversity, which is risk mitigation for investors, which all falls under VST. There's alignment with management in that management is the largest shareholder. We have a healthy balance sheet. So 6 consecutive quarters, not one, not two, not three, but 6 consecutive quarters of positive net income, earnings per share, over $6.5 million of cash and cash equivalents on the balance sheet. So again, no debt, no fear of dilution. Our business model is we buy low, build, sell high, where we're able to actually self-finance kind of the business, and the share dividend. So we issued a share dividend in Q2. We issued another one in Q3, which has been publicly announced. So this is something that investors can kind of look forward to. And if anyone, I think takes a look at our corporate update on Monday, or which was attached to our financials, they'll see that, there's subsequent events that have kind of come about since June 30th, from adding Creator.co into the ecosystem, Immersive's share dividend, and just other things, CQT, which is, I think, a really exciting project on our balance sheet, which if anyone looks up the value of CQT tokens and sees how much, how many CQT tokens we have, they'll see that that's going to show up on Q3. So there are a number of catalysts and subsequent events that have happened since Q2 that I think are going to be exciting. And what I would recommend everyone do is follow the story. Look at our updates, look at our financials. The entry point is great, and I think it's an exciting time for people to jump onto the Victory Square story.
In fact, I would just add one thing onto that, Shafin, that everyone should go to the Victory Square website right now and look under portfolio and just scan those 23, 26 companies that are there. And they've got a one-line description of each of them, and ask yourself, do I have expertise in this area? Would I've even known to be able to find or invest in this company at an early stage, the portfolio companies? Could I evaluate it? If you can't, but you want to be part of the disruptive tech decade, then you've got to seriously consider Victory Square. I can't tell you to do it. I can't give you financial advice, but do your due diligence, guys. Get to the Victory Square profile in Agoracom, and then get over the Victory Square website from there. If you just take a look at the portfolio companies, I think that'll change your mind. And like I said, they put their money where their mouth is. Record net income, 19.7 mil and 30 cents per share in 2020. And for the first half of this year, 7.6 million in adjusted net income, and all sorts of great numbers. Do your due diligence. Thanks for joining us. Shafin, as always, thanks for being here, man. See you guys next time.
Thank you so much. Cheers.
Hey guys, this video is over, but don't forget to help your company by liking it and then leaving a comment below. And then don't forget to help yourself by subscribing to our channel so you don't ever miss another great Agoracom small cap video.